Grains closing mostly lower again on Thursday. Kevin Duling with KD Investors is back with analysis. And Kevin, it has been an ugly, ugly week here in the grains, contract lows in corn and wheat again. What's causing this? Is it money flow, or is this all about weather?
A little of all those. I mean, the biggest one, I guess, if we look back at Sunday night, we had crude oil open up $5 a barrel, and then as the session progressed, it closed down $5, almost a $10 move in crude oil on Monday alone to the downside from where it peaked. And basically all the commodities started falling in line with that. So that shouts money flow to me. That doesn't shout fundamental stuff behind the grains. I mean,
yeah.
Charts were very supportive just a couple 3-4 days ago. They look much better than today, and it's just like, wow, they really deteriorated.
So you're pointing to a lot of macro type of factors that have been influencing the market and that money flow. Then
what happens is you get macro selling, you get stuff, the money flow in that, and then the hedge funds react to it with the trend following computers. And so if the trend is the same, they just continue with it. And if they hold a higher portion of the contracts, a higher open interest than normal, they move the market farther than they used to. And so you get these exaggerated moves. And so as a producer, somehow you got to survive these things as a end user. When we start getting into these levels, you got to, put your buying hat on and start loading up. So, I mean, the good news, this should spur some demand. The bad news, producers probably not out of the woods yet, unless we get a big ridge moving right over the Corn Belt. We're probably, it's going to be hard to shake anything loose on the fundamental side that's going to make them change the trend.
You mentioned we may stimulate some demand at these lower levels. Did the market have to go down, especially like in the case of corn, to compete against the big Brazilian corn crop? Argentina prices are actually lower than we are right now. So is that what this market has also been doing?
Oh yeah, that's definitely part of it, the world part of it. It's just the timing. I mean, this is Brazil's time to export. This is their time to be the primary corn exporter. It's not ours, but it is our time to look at the weather risk, and to be just plummeting right ahead of the weather risk is odd to me.
Where do we hold here? What do we look at on the charts in terms of what round numbers now? $10, $5 on wheat, $4 on corn?
Yes, we get down into those, and we got round numbers. You've got, the importer demand, feed demand should catch in at those levels. At least they should be taking note of that. We'll probably move past some of those for a little bit, the way it feels, but overall, that should be a good line in the sand to start with.
Like you have said, the wheat market has looked so many times like it's wanted to put a bottom in, hasn't it?
Yeah, I was just looking through the chart on that, and there's so many times. There's different technical formations have, different weight. And when I see a huge saucer that takes in 4 or 5 months and it makes this big bowl look to it, that is a very reliable signal. And we've seen that fail 2 or 3 times now. I mean, this one last failed just this week, and you had a nice head and shoulders look to it. I thought, okay. And then we took out the upside of that, and I thought, okay, that looks fantastic. This thing's getting ready to at least maybe get a little bit of reality back in it. And then this week we took that all back. So yeah, it's a different world right now.
Right. And even soybeans have dropped below the 100-day, the 200-day. And so the funds were actually a little bit long there. Does that kind of spook or get them out of that market too?
Well, it depends. It depends what kind of funds we're talking about. I mean, I've kind of noted that it felt like there's been sort of what I've been coining a mystery seller in these markets for quite some time. And they get really active anytime the trend starts to change. I mean, soybeans were just they had a really good base under them, and I thought, okay. And then we had some, good renewable fuels data, and I thought, okay, this thing's got a chance to make a good move here. And then it's been falling out of bed since then. So there's a lot of stuff going on. There's a lot of politics. There's the money flow is rough. The interest rate thing has got our country kind of in a bind, and so that's making the Fed make moves they normally wouldn't. And you just have to add it all up, and it's a very difficult time for producers, and I'm not sure when this ends.
We are very oversold, though. You're getting into end of month, end of quarter. Will, especially in the corn market, the funds be motivated to do any short covering to pretty up their books here, though?
That's hard to say on a day-to-day basis. I've kind of counted on that before in the past and been let down, and once in a while they will. So we'll see. Tomorrow should, or Friday should be decent. Monday, who knows? I mean, because it's coming into those reports on Mondays, it's nobody wants to take a position ahead of that, and as long as the computers say we're still headed down, they don't cover much. So I'm not expecting a big move.
As far as the report, how bearish would it have to even be, either on quarterly stocks or acreage, to do any more damage to this market?
Boy, you'd think it'd have to be just catastrophic to keep the trend going lower at this point with that kind of a move heading into it. So typically, when we see a big move heading into a report like that, the trend doesn't keep going after that. So there's a very good chance we see a strong reversal higher, and maybe we set a low point for a while here. We'll at least get into mid-July before we take that out. So we'll see if we get some kind of reversal action Monday.
So beyond weather, Kevin, do you think there's something, a catalyst that could turn these grain markets? Could it be some of these trade deals, or if we finally got something worked out with China, or what?
That's probably the biggest potential right there, is the Chinese. If it's some kind of a trade deal with them, that might change it. I'm still nervous about the overall macro setup. I mean, seeing what energy did this week, with all the unrest in the Middle East, it defies logic, and so it feels like it's going to take something really notable on the fundamental side to reverse the macro side of it.
Let's talk about the cattle market, because it looks like we put in a cash top, at least for now, and the futures today, we're at a big discount to where the cash is. So does that kind of put a floor in here or support that market?
It's acted like we wants to hold a little bit here. I've been encouraged by some of the price action. It scares me when the funds are long. If they want to get out of that position, if they're done with the long side of cattle, we've got a long way to drop without anything to do with the fundamentals. So I'm hoping they'll stay in there a little bit longer and get another bounce in this thing. We'll see. Like I say, the demand looks great, or pretty good anyway. The consumer is a little frightening. That scares me, because I feel like the budgets of people are pretty strained right now, so they can't handle any higher prices than this. So I don't know. Best case scenario is sideways, but don't be surprised if we see a decent backup in the futures at least. So.
Yeah, for sure. And it seems like the funds at least are defending their long positions on these breaks, aren't they?
Yes, that's been the feel. I've been encouraged to see that. So maybe they're not quite done with this market, and we can make another little stab back towards the highs. So that'd be encouraging.
All right. Thanks so much for joining us, Kevin Duling with KD Investors. That is Markets Now.